My name is John Rowland, Bar Chart's Head of Trading Education. Welcome back to another episode of Rowland's Trading Roundup, where you can better learn about the features and tools that Bar Chart has to offer. If you're new here, hit the subscribe button to get alerted anytime we upload a new video. Before we jump in, please take a moment to pause the video and read this important disclaimer in full. Any decision to buy, sell, hold, or trade any investment involves risk and are best made on the advice of a qualified financial professional. So first, let me start is I want to give you guys kind of some generalizations when it comes to charting. First is that I don't want you to overthink it, right? I just want you to look at charts, and if you don't see anything, well, then there might not be anything there. Markets spend an equal amount of time moving sideways as they do trending up or down. So if you don't see something, here's something that you can do. You can change your perspective. In other words, your time frames. In our webinar, multiple time frame analysis, we talked about moving from different time frames to get a greater perspective on the market. Sometimes we need to see a bigger picture before we can understand what's going on at our lower time frames or what's going on now. The second thing I want you to be aware of is that there are cycles to price. There are large cycles and there are small cycles, again, depending on our time frame. And this is as price moves from high to low, or what some folks would call support to resistance, or resistance to support. So I want you to think of markets like the tides, right? Think about the tide. It doesn't move from low tide to high tide on one giant wave. No, it's a series of large and small waves that go back and forth that are trending in that certain direction. And that's what I want you to start thinking about, right? Most patterns that we're going to look at fall into two categories, something called a reversal pattern or continuation patterns. And these types of patterns can help us zero in on these trends, our tides, so to speak. All right. So let's start with the concept of reversal patterns. All right. So the term reversal could be referred to a reversal of trend or a change in momentum. And obviously, if we can discern a trend reversal, that will become more advantageous to us. But changes in momentum as price action transitions from one of our time frames to another will, especially those when we move from lower time frames to higher, that's going to give us a greater confidence in our price predictability, right? All right. So one of the first ones that we can just jump right into is our double top. And let me pull this one up. Okay, a double top. Now, these are trend reversal patterns that can signal a strong resistance top, and the formation consists of two consecutive topping actions where the second fails to get above the previous high of the first. Okay, let me see if we can widen this out a little bit for you guys to get a little bigger picture. Hang on. All right. Now, there are different types of double tops. There are double tops where our first high is higher than our second high, or there are double tops where we have our highs are exactly the same, or in this case here, where we see the second high has actually gone above the previous high. But again, the key here is that we don't want to see it close above the previous high. And especially when we're looking at higher time frames, or we're looking at all-time highs, we're looking at a very significant topping action. If we're at an all-time highs and we see this failure of price to make a new high or close above a new high, then that is a signal of failure of that trend. And that also can signal to us as a very strong topping or resistance area. Now, a downtrend confirmation can occur when price falls below the low between our two tops. Once price falls below there, then we can make the assumption that we are now in a downtrend. So let me talk about another thing here, and we're going to see this through a lot of today's price action, is there are two ways we can enter in a lot of these formations. We can do what we call breakout entries, right, and chase price as it runs away. That is very common among a lot of traders. But what I want to teach you guys today is patience, right? And that a lot of times that when we get these patterns and when we get these breakouts, the market always comes back and tests or retests where we have these breakouts. Not always, but a good majority of the time. So we're going to see this a lot today. So I want you guys to be aware of this as we walk through a lot of these examples, that we can look for the breakout trade, but a lot of times with breakout trades, the price runs away from us too fast, where we want to be a little bit more patient, right? So again, here is our breakout, right? And you can see in very small time here, there's a little wick here that did come back and kind of retest it, but over a period of time, price did come back and retest this area of this double top. Now look at this. Over a longer period of time, we definitely got a couple other retests of this very significant topping action, all right? So don't be afraid to wait and be patient to look for some topping actions and or breakout areas where we can come back and test them. I hope this video was informative. If you enjoyed today's content, make sure you subscribe to our channel and give this video a thumbs up. Until next time, the good of all trading.